Welcome back. We have Chintan Thakkar with us now. He is the Director and CFO at InfoEdge to discuss their earnings this time as well as the outlook going forward. Mr. Thakkar, good morning. It's good to have you with us.
Hey, good morning.
Lots to discuss today. Let's start off with the earnings. Revenue and operating EBITDA. Now, that's significantly come down on a year-on-year basis. There does seem to be an exceptional gain of 374 crores in Q2. What's that about? And if you could take us through perhaps the performance in each of the businesses, Naukri, 99 Acres, Jeevan Sathi, to help us better understand really how things are shaping up.
Yeah, let me first take you talked about exceptional gain. So you are looking at the consolidated accounts, So this is more of an accounting entry, it's kind of a notional gain that, we are expected to book when we dilute our stake, and that we have stakes in companies like Zomato and Policybazaar and Happily Unmarried. So whenever they kind of do their fundraise, and if it is at a significantly higher valuation, we kind of have a notional gain on the reduction of our shareholding over there. So I think it's an accounting entry, so let's not read too much on that. It's a notional gain. Right. Going back on the actual operational numbers, we are broadly, we can say that there's a gradual recovery happening from Q1. If you look at it, it's 32% increase in billings and similar increase in kind of revenue. So I think that's a good recovery from where we were in Q1. Of course, we are still really under the pandemic situation. And that's why when you look at YOY, we are almost like now we have reached at 80%, 82% kind of level, which is a little better than what we had initially expected in Q1. And yeah, I think we have been trying to kind of a little bit control on the expenses side as well. So we have been able to largely ensure that the underlying margin structure remains the same. Though right now this margin is a little lower, but I think the underlying structure remains the same. So we are pretty hopeful that Q3 situation could even improve better than where we are, and we are seeing month over month there's a gradual recovery happening. I think so that's a good news. And I think the similar story for each of the businesses, even if I kind of drill down into whether it's a recruitment, whether it's real estate. In fact, Jeevan Sathi, as you know, that even in Q1, it was growing and it has continued to grow even at higher rate in Q2, So we are seeing that B2C business like Jeevan Sathi is continuing to grow for us. And we are continuing to invest a lot more behind that brand. And that's one of the reasons why you are seeing some of the dip in the margin, If you really take that out, then then the margin remains the same as what it used to be. So, like for example, recruitment, the margin is still 55%. So I think it's an overall.
Okay, so I'm going to come back to some of these points. Mr. Thakkar. Just to also understand on billings, because we have seen an impact on that as well. They've come down about 17% year on year, but have actually picked up on a Q on Q basis by about 32%. What has been the impact of COVID on the overall business? Last time you'd mentioned that nearly half your collections, in fact, happened in the month of September. Or do happen in the month of September. So how did we see performance then during that time?
Yeah. So as I said that, yes, if you really look at from Q1 to Q2, there's a growth of almost 30% plus. And that shows that there's a gradual recovery. So we have seen that July was better than June and August was better than July and so on and so forth. Right. So we have seen that September was much better than what it was, let's say what the June was, And that's getting reflected in some of the recovery when you compare it from YOY basis, from Q1 to Q2. Of course, as compared to last year, the pre-COVID situation and the situation is very different. So, but we are inching closer to it. Like, Q1, we were almost like, down by 50%. Right now, we are down by about 20%. So I think, we are inching closer to the pre-COVID level. And we hope that, Q3 could, take us even further closer to where the pre-COVID levels are.
Zomato, since you also mentioned it last time we spoke, the management had said the cash burn had come down to about 2 to 3 million. Has that further reduced? What's the latest? We're also hearing reports that Zomato will raise a little over 146 million, and you recently also raised 5 million from Pacific Horizon. Any update on the fundraising, IPO plans for next year?
Yeah, no, I think that there's a lot of inbound interest in investing in Zomato, because what has happened is that as a consequence of pandemic, the growth that which is now coming back on table, right? So there was an initial impact on it, but now that the rebound is happening, the rebound is far more profitable. And that's why the financial situation has improved, sharply, and that's why we are seeing a lot of interest, in terms of investing in Zomato. So you are right, whatever you have heard, I think it's going in that direction, but it could be even more than that. I think board will take a final call on the total fundraise. But the interest is at a much higher level than the numbers that you talked about. And so they are planning for IPO as well, and they are very aggressively trying to see if they can keep the company ready for it, so that whenever they think that there's an appropriate time, they can very swiftly move in that direction. So yes, praise as well as the IPO plans are being very aggressively pursued.